Welcome to Truth, Money, and Freedom. Today's Thursday, February 21st, 2019. And there is a story I'd like to talk about a little bit here, and that is why is the stock market going up? Keeps going up and up and up. Today, not so much, a little bit of a red day here. Not much to worry about because it's not a big red day. But the markets are generally up. We had a huge dip back in December, and it seems like the markets are going back to their old highs. How can this be happening? What's going on? All good questions. Let's cover that today with what we call quantitative easing. This is a process by which central banks throughout the world, not just the Federal Reserve, but the Bank of England, Bank of Japan, Bank of China, the EU Bank, or the ECB, are all printing money. And that money is going into stock markets. So that's what we're experiencing now. And it's happening all over the world. All of our markets trade together, if you guys have noticed this. Seems when the U.S. stock market goes down, then all the other markets go down for the next day. And if the markets go up in the United States, then they go up worldwide the next day. They all trade together. And that's because they're all in the same playbook, playing by the same new rules set up by central banking. Print money, put it in the stock market. Why would they do that? Well, to increase confidence in regionalized economies. That's the real reason. But there's other reasons too. We won't get into all the specifics, all the innuendo involved with actually propping up stock markets and what benefits banks as well as governments get from it. But I do want to talk about this just a little bit more because it's the concept of what's going on right now that anyone who understands should probably be very angry about. Okay, so the central bank prints money out of nothing, nothing backing it up. They just print it, and it could be a physical printing of paper, cash, or it could just be, creating dollars on computer screens. They do it both ways. And then taking that money that they created out of nothing and buying up stocks, bonds, real estate, whatever. You and I have to work for that money. We have to sweat for that money. We got to put in time. We've got to give up our time to have that money. They don't. They're above the law. They're above, the natural order of how money is supposed to actually work. Currency is not supposed to be this way. So if the bank can go ahead and just print up money and buy up everything, what chance does that leave you to leave yourself in a better position for your retirement or leaving things behind for your kids? I mean, you're fighting a losing battle here. The lost war is what they talk about here in this particular article here. This is on Zero Hedge, by the way, and I will link up this article down below. But the concept is not lost on me. The banks get everything for free. We have to work for everything. It's literally that simple. There is no more complicated aspect to it than that. The central banks of the world print up cash, print up digital cash or physical cash, whatever, out of nothing, and buy up stocks. That's exactly what's going on. That's why you see the stock market going up. We do it two ways. The Exchange Stabilization Fund, also known as the Plunge Protection Team, works under the Treasury. So that's actually a cabinet level position under the President of the United States. And they literally get to do the same thing too. They get to print money out of nothing. Well, more specifically, they kind of quote unquote borrow it from a bottomless account with the Federal Reserve to stabilize the markets. That's the purpose of it. And so they're supposed to take that money out and put it back into the Treasury so it doesn't hyperinflate. I'm sorry, not into the Treasury, but to the Federal Reserve. So it doesn't hyperinflate the local currency, in this case, the US dollar. However, since everyone's doing it, the Bank of Japan is just really well known for this. So Bank of Japan actually owns 75% of the Japanese ETF market. Now, think about that for a second. The Bank of Japan, their central bank of Japan, that prints money out of nothing, owns more than 75% of the Japanese ETF market. They didn't have to work for it. They just printed it up and went out and bought everything that people have to work to earn money to actually purchase ETFs. Not the case with the Japanese market. And ETF is electronically traded funds. That could mean a whole bunch of things. It's probably something along the lines of derivatives, bonds, and some stocks, or stocks in, basically a conglomeration. Um, but China added $1 trillion in liquidity so far this year. Um, So basically, money printing is going on, and some of that money is going into the stock market or stock markets worldwide. It's not just our market. All of them are going up. So now you know where the money's coming from. So it's not like, your Uncle Ed had, $5 trillion just sitting in a bank account working for, waiting for the right time to work that into the market. It's not like that. The central banks are literally creating money out of nothing to buy up assets. That is what's happening. And if you're angry now, then you understand. You understand what's going on. And this is all above the law. There's nothing we can do about it because central banks set up monetary policy for their individual countries. Now, the EU is a little different, but it's fundamentally the same. Just because there's one bank that handles, was there 27 countries in the EU? I can never remember. So you got one bank handling that for 27 countries, and they get to play favorites. They get to do the crony capitalism thing. So the countries that are favored, definitely get more money printed, or they get more reserves, or what have you. And we will do something on Italy real soon. I promise you guys, so you guys can understand what's going on with the EU and Italy out there, and Italy's banking system, which is not very healthy, but neither is Deutsche Bank in Germany. So, but at any rate, I wanted to share this concept with you guys. For those of you who have never looked into anything like this before, it's very interesting to watch. Start watching the world's markets. They all trade together, and they've been doing that since 2008. Why? Well, because the monetary system as we know it today, literally the financial system, literally died in 2008. It's still dead, but they've got it hooked up to all kinds of life support equipment right now. For instance, quantitative easing, negative interest rates. They're inventing new things all the time to try and keep the system alive because it is dead. And with quantitative easing, they keep printing more money. And that's here in the United States with the Federal Reserve, which guarantees a hyperinflation. It guarantees it. It's just a matter of time. Now, if they can keep it all corralled in the stock and bond market, there won't be a hyperinflation. But at the same time, those assets won't be real, and they won't have real value, and no one will know what they're really worth. It's just that, the government will own it all. And that probably will be the case with real estate as well. Banking, systems will own all the real estate at some point. It's kind of like the game of Monopoly. Because they get money for free, they get to print it up, they get to create it, and then they get to go buy things with it. And so they don't have to work for it. So it's a very, very different kind of concept, for many people to wrap their brains around. But it is accurate, and that's the way the system works. And this, by the way, isn't something that's been going on forever. This is kind of new since 2008. Now, I'm sure that there was some degree of this going on pre-2008, the big collapse. But it just wasn't anywhere near as bad. So we will keep an eye on this for you. But that's why you're seeing the stock market go up right now, is because money, fresh, brand new money is being printed, either paper or digital, and it is going directly into stock markets around the world, propping up these markets so they can create the illusion, very important here, the illusion of a healthy economy. Because that's what everyone thinks of when they think economy. Well, the stock market's up, that means the economy's good. No, this is a total illusion. So if you stopped watching the stock market and started watching bond yields for sovereign bonds, it doesn't matter, pick a country. you'd see very quickly that the world financial system is in dire straits. It's constantly on the verge of collapse. And right now, the bond yields between the 2-year and the 10-year are inverting in the United States, and that is a sign of recession. That's an impending recession. It's right around the corner. So, what do people do when things like this happen? Well, the bond yields themselves indicate that the bonds are overbought. So basically, that's when people generally go to safe assets like gold and silver. I would suggest gold, silver, and a little bit of crypto. I would say it's okay to hedge your bets, and with all of these things. Um, I am not a financial consultant though, but that's what I have done for myself. I'm into gold, I'm into silver, and I am into crypto. And we'll do later podcasts on crypto and basically how to look at the crypto market, how to understand it, for those of you who are not in it. But I'm not a big trader of crypto. I'm a buy and hold kind of guy, like I am with silver and gold. So, at any rate, you all have a wonderful, wonderful day. Thank you for spending a few minutes with Truth, Money, and Freedom, and we hope we've increased your understanding a little bit about why these stock markets continue to rise, despite the fact we have store closings everywhere. We have, like, for instance, the auto market is having like the worst. The 2018 was their worst year since the collapse in 2008. Yet they don't talk about that either. The store closings like crazy. The fact that retail, they call it retail Armageddon or retail Mageddon or whatever. It's also happening with online sales too, and everything's being affected. But as long as they can keep the illusion of the stock market alive, I think that that's all they're really trying to accomplish here. But in the same time, they own the stocks. They actually own them, and they got them for free. So you and I don't get stocks for free. You and I don't get bonds for free. We don't get real estate for free, but banks do. So always remember that. The banks can print up money and buy anything they want. I'm talking about central banks. I'm not talking about your local banks or regional banks. I'm talking about the big banks like central banks. I'm talking about your J.P. Morgans, your Morgan Stanleys, the Federal Reserve, Bank of Japan, the big, big banks. They can do this. We can't. So it's an uneven playing field. And they literally are stealing your future wealth away from you by doing this. They are literally trading in future wealth for today's gains. Thank you again for listening today, guys. If you have any comments, please leave them below. And also, if you want to join us, we're on a Discord server. There's a link below. You can click on the link and create an account and come and join us. It's free. We talk about all things truth, money, and freedom. We have a voice chat. We have a text chat. We have a good time in there. So thanks again for listening. Have a wonderful day.